wake up, God damn it. Welcome to MARKETcast with Unk and Market Monk. Morning, P. How's your week?
Really good. Just it was kind of interesting. I mean, you had this big collapse in solar stocks. I didn't actually catch any shorts on those. I just caught the run up and then the aftermath. There really wasn't much more room down on some of those, particularly First Solar on Friday. Just had a pretty decent recovery, about 5%. So traded that.
Nice, nice. Yeah, pretty light for me. Sticking, kind of stuck with the previous winners. Um, to be honest with you, two of my trades pretty much made my week. That UCAR and CXAI times two. Um, but yeah, it's nice to see the volume back in the market. Um, in certain areas, not nice to see a lot of the regular things kind of just sell off slowly. But volume is king right now. We're back to that where volume is king, um, and it's pretty sporadic. I don't know about how that affects options, but on the share side, some places are just a ghost town.
Yeah, it's you do get there has been a lot of that. You get maybe like an initial move and a reversal, and then it just slowly bleeds out the rest of the day. That's been pretty common. A lot of stuff isn't. The indices right now heavily weighted towards the mega cap tech stuff, the Microsoft and Facebook and all that. And so some of the other stocks aren't really quite benefiting. They're not aligned with the indices, and that can be good and bad. I mean, I think you sometimes like to trade something that's kind of operating independently, but also it's just a little bit concerning. Like some things potentially breaking down to some of those previous lows. Already saw that with net. I think you have to. What you want to do is um, for me, I'd rather trade net after it collapses like that than get in something like CrowdStrike where it's kind of uncertain if it's going to follow it down there or if it's going to stabilize. Yeah, there's a lot of uncertainty in a lot of stuff I follow. Is how I'd put it.
Yeah, if
Waiting
it
for Powell, I think.
yeah, 100%. I mean the Russell 2000, which I got up on the screen, kind of showing that where the weakness is at. I guess to say. I mean, it's down, down testing the New Year October lows. It's already been down there twice in the last month and a half. Um,
Yeah,
where's your big name? I don't want to call. I guess I'll just call them what I always call them. Your sexier plays, or kind of in a melt up on low volume. And yeah, we've seen it. I think we've seen it 5 or 6 times now. We just are front loading J Powell's decision in place. In most places, people want to be that the Feds are going to pivot a little bit, and that coupled with ERs. I always like to go in the ER season with an open mind and see how they respond. See like the common denominator with how they respond, and it's 100% just guidance. I mean, you could have a great report, you
yeah,
could have a bad report. It does not matter right now. All that matters is your guidance. Um, Knowing that the numbers, the expectations that Wall Street set are just to spitball a little bit, are 25% lower than they should be, um, which is why we're seeing a lot of people beat on the front end. But the market really doesn't care about even meeting that low bar. It's all about the rest of the year for you. Um,
yeah. Like Enphase didn't have minus 25% numbers on their earnings. It was that guidance. It's the idea that rate hikes are going to hit the solar industry. People aren't going to be as likely to put that into their houses and facilities if they're tightening. Comments like that are what sent it down.
yeah, yeah, they have the whole God, the government credits and state credit system going against them too. It seems like right now. I know California had some big news that Um,
Yeah.
it affects poor people too negatively for us to give you tax credits on solar panels. It was something like that, which, um, yeah, that state never fails for me. Um,
Right.
so yeah, I still see that. I mean, obviously we have a huge week of ER coming here. Um, I'd say we're about halfway through it with the big names. Ton of them this week, and then obviously we do get the numbers. I'm still on 25% or quarter point, I guess you'd call it, quarter point rate hike here. I don't think they pause, but hopefully they lock down that they are gonna pause. And they don't really have
Yeah.
to. They don't really have to do that, right? They don't have to tell us like, "Hey, next time we're pausing." So it's all about the rhetoric that we get from them on Wednesday. Um, I guess like it's been the last 5 or 6 times.
Yeah, and I think it's one of those days where you have just some very short-lived, massive volatility in spy and related things, and then it kind of settles into a direction after that. So that's always something to be aware of if you're going to trade that.
Yeah, I got a big. I mean, it's pretty big range on SPY. 430 to 370 is kind of the box that I think we're in currently. And I think we talked about a little bit in chat. Like, if the Bears are thinking they're winning here, I don't know what planet they're on. I mean, where should SPY be at currently, or the market in general be at currently? I mean, to me, it's at the top end of the recession channel, or real close
Yeah.
to the top third of the recession channel. Um, and it's holding up pretty well. I didn't see us getting the back into the upper teens, and if you just look at Thursday, Friday, it looks like we're going to just run right into next Wednesday. We are going to test that 420 in my opinion, um, before Wednesday. Um,
Yeah, no, I think so.
the the
Yeah,
bottom the
it's
bottom keeps lifting in my opinion too. I mean, I was like a 390 guy. I don't even know if we get back to the 400 now. I mean, the way it's running.
yeah, same deal in QQQ. It was that 304 spot. I'd say it's about 10 points ahead of that now, like about 314, something like that. Yeah, and I don't know what Bears they start talking about, regime change and tectonic shift and proper bear market. I see all those comments like that. I don't know what exactly they're really talking about. I mean, I would agree that Apple's getting pretty close to overbought. You could say Microsoft is overbought, but I think there was some substance to that move, and it definitely was flow supported. I had those 310Cs for this week that I listed before earnings, so they clearly plan to take it up there. And I think you're kind of deeply cynical if every time the market starts to make a direction up that you're like, oh, they're setting up a rug pull. I mean, to where though? It's are they going to just go to where we were a week ago? And is that a bear market move? So we're getting pretty close to some sustained upside, I think.
Yeah, I think the best example for me, the one I can explain the easiest, is Tesla. I mean, yeah, we pulled back. I was pretty adamant we were going to, but we pulled back to 50% of what we were. I mean, we were at 100.
Yeah,
Pulling back to 150 is, I mean, to me, that's a perfect high or low. Especially if you get news that's not the greatest, and you get a strong bounce off of that level. I mean, and that's what I see with all the big. I mean, you name it, Netflix, all the big names, Meta, Microsoft, Apple, all the big names are in that boat where there's just no way one single news event is going to take them back to those January or October lows. It's just we're far from that now.
yeah,
The surprise to me has been metals and materials, um, and I just kind of do my quick flat brain research. Why is it happening? And to me, if people aren't producing more, I guess that's who takes a hit. So if you do have bigger margins on less inventory or less product, um, the company will do okay that's making said product or selling said product, but the the suppliers of the metals and materials or the whatever behind that you need, they're going to take the hit because you're not ordering as much from them. So that's kind of how I put
Yeah.
that whole sector. I don't know how you if you see that a little different. If there's maybe some world news going on there that's making across the board everything drop. I guess outside of gold, all the stuff we follow pretty much is just slowly selling off, in my opinion.
Yeah, it is, and it's doing it. The prices, like copper prices, are pretty stable. They're 389, so they did dip below four, but not like 375. Sort of my like the pivot point on that. So yeah, it's all about kind of the perception of demand going forward. I think that's what's doing it for now.
Yeah, I mean the
So yeah,
price.
they're checking
Go
they're
ahead.
checking back to some familiar levels. Like X, I think could potentially. I have a couple of different level groupings on X, and it could potentially be breaking down to that next one. So I could definitely see that.
It's out my next one. I like the comparison
Yeah,
of our lines.
yeah,
Yeah, the prices are real stable in most things. It's that divergence that's standing out to me. The prices aren't dropping in those like steel, right? As opposed to
yeah.
the how big well steel's probably let's go silver. That's probably a better example. Silver's still $25. Those stocks are kind of slowly bleeding out, and there's a big divergence in that price correlation to the stock prices. Um, I think you're kind of seeing it
Right.
with oil
Yeah.
a little bit too, where those charts aren't really following price per barrel currently.
Yeah, and I mean, Friday's move was pretty much all Exxon, and then everybody went along for the ride. They had a big earnings beat, so some oil earnings coming up that should be interesting. Gonna read reports on some names like APA, see what they have to say.
Yeah, I actually had
Some of
two
that
of
smaller stuff.
I had two of them, well, one medium size and one big guy in my notes, and a lot of the charts I noticed that I was I scan through 400 of them every Friday. Um, a lot of the charts were on a level that we had previously charted with ER coming up this week. There was a ton of them, enough to where it stood out as a trend almost, and I hadn't caught that before. Um, but Microsoft was the same way. I mean, not to switch back and forth, but it was the same way. It sat at that 286 until we took off.
Yeah,
Um, so it's just interesting to me that we are respecting levels going into ER, but it's all about the guidance. If not, you probably are going to check back a little bit. Um, unless you say AI a bunch, I guess that right now that's pretty much the only thing that's saving people. Um,
right.
the tech heavy though is kind of, I guess, too euphoric for me right now. I don't know if I just hung out with you too long. That I think the better plays are let's just use Apple. Like buying Apple at 170. I mean, 165 to 170. That feels like you're buying the top. Um, especially if you
Yeah,
look.
it definitely does. And for for options traders, I mean, yes, you can trade 0.5% moves on Apple every day if you want to do that, but you're just sort of flipping a coin. I mean, yeah, like you can find some oversold spots on the chart when it dips, and you can see SPY going back up. You're scalping pennies in 10-minute trades, and I just don't know that. I don't think that can be your bread and butter to be a consistent trader. So that's why I don't emphasize playing Apple every day. You play Apple with size at the right spots, and you'll do well.
Yeah, that chart. The chart I got the chart up right now. That chart just looks like we're about to pull. I mean, it's not really a strength move. It's a slow melt up. Volume's not great. Um, and we're just reaching that higher, perfect higher low if you put a trend line here up on the downside. You got 180, 175, 171, and now here we are 169. Um, to me, this isn't the chart you play. You play the, I don't know, the CLFs of the world, right? That's more of the you buy the
Yeah.
bottom, you buy the bottom on the sad days, not the top on the happy days, and it seems like people just want to park their money somewhere right now. They're kind of over holding cash, so you're getting the old
Yeah.
school Fang names or whatever, um, are just getting piled into kind of. Just it's been interesting to me. I didn't
And
expect that at all.
right. Yeah. And I think, Amazon was really interesting in that, I mean, had that big move up and it just gave it all back and then some. And, but what that did to the, some SaaS stocks, because, the AWS is such a huge part of Amazon. And you saw like what happened with Snow and MDB and how like they popped up like 6% when Amazon announced. They pulled all the way back. Snow plummeted to -5%. So an 11% move from the start of after hours to 15 minutes after open. And it just so happened to pull right back to a level that I know really well. And so that's why I put it in my notes. So so to me, the finding the right sympathy play or finding
Yeah.
something that just overdoes it with the selling and happens to park right at a level about, those are the safest. Those are the safest trades. Playing net on Friday was not catching a knife. I know it seems like that, but to me, catching a knife would be it crashes through a level I know well and just keeps going. But if it's going to just pull back, I don't care if it's 5%, 2%, 25%. It's going to pull back to an established level that we have, one of these historical pivots. You are pretty safe to enter there. Might not want to enter zero DTE. Might want to add a couple weeks to it, or God forbid, you just buy shares. But those are the kind of trades that you want. That's how you take advantage of the volatility. You don't just look for something that's crashing. You look for something that's crashing to a level that it's going to respect. That's what our whole system's about.
Yeah, I don't. I mean, I don't trade the options, so I don't understand why it isn't like the beginner strategy to find things that fall to support and just play the relief off of that. That seems like the safest setup because you're getting contracts that are just like they're just losing value, right? But
Yeah,
you know where the bounce should be at. Like you have that predetermined, and then when it confirms, um, which net did twice. I mean,
yeah,
if you don't chase the first opening 10-minute candle, I'll give you that. But an hour later, it had a higher low right off pre-market low. I don't know how you're not just playing what 45s or 46s 2 weeks out at that point in time. Um,
yeah. And I mean, and here's the deal: just that just basic relief itself is going to make the trade green, and it
yeah,
gets you in before the buyers that are probably going to step in. You don't know that they are, but you've seen it before, and they're likely going to do that. That's the deal with Snow over and over again. Is it it falls to these levels. When it falls to 140, might go to 138 for a minute, but that's why I don't really do weeklies on it. I'll just go a few weeks out. But you're just going to catch that relief, and then I'm like, okay, they're probably going to move this back to 145, and then it can go from there. And then you just have a decision. When do I want to exit this? And that I think that depends on how many contracts you have, or stops you set up, your work schedule that day, whatever. You can just sell it all then, or you can plan to keep some. But I think the planning part's important. You have to That has to be part of your plan. It's not just like I bought one contract and I'm up 40%, and you're like, okay, I'm going to hold for more now. Did what were you thinking going into it? Because 40% is pretty damn good. You might just go ahead and take that.
so I went to net. There's $50 calls. I don't know why there wasn't something in between 50 and 45 on this monthly. I don't want to really get into that, but it was just at NA on my
Yeah.
side. But the second flush that I'm talking about in regards to the chart, the price on the option was actually better. Like your initial dip was to 80 cents on the
Mm-hmm.
on the contract from like $4. Um, and then the secondary bounce you got it for 60. But
Yeah.
on the regular chart, the stock price was 42 on the first bounce, and then the second bounce was at 44. So you're getting it at a better price. Um, to me, I don't know how people don't put that stuff together. And then it ended up, that's 100% contract at the end of the day. It went to $1.50 from 60 cents, and
Yeah.
that's just one quick. I mean, that's just one quick example playing the next strike up, but um, that people don't look how they move in relation to the stock. I mean, this was 80 cents. I got it on the screen here. This was 80 cents on that $50 contract. This was 60 cents on that $50 contract. And it's not an ODT, it's next month. Um, and then you're only playing it back, you need like just basic relief. Let me pull that back up. You just
Um,
need
yeah,
basic
and that's
relief like to 50.
and the reason that happens is that on that initial drop, you get your kind of instant planned by the dip people that just they want to get in those contracts because they're considering the fact that you might have something that happens with you or Beyond Meat where that initial relief just keeps going. And that didn't happen here. It did pull back a second time, so there just wasn't as much demand for that contract the second time around. But you're still kind of playing the same setup. So what I do in those situations is I trade it like when we say the secondary move is safer. That's definitely true. And my bigger position is on the secondary move. I will oftentimes I'll scalp puts on a big flush at open, planning on trading that for about 5 minutes. I'll play that first bounce, um, small again, and then we kind of figure out where we go from there. On the pullback, I'm either out, going to re-add, or whatever. If if your position sizing or your port or whatever is for one trade, that pullback that you pointed out, the $60 one, you want to just try to be patient and wait for something like that. Um, don't buy that initial one and then decide I'm gonna hold this through the chop or whatever. You just if you want a sustained move, things have to kind of calm down before you get that. That's usually how those
Yeah,
go.
yeah, no, 100%. I think that where we line up well is you need to have a plan before it happens, or you need to make a plan in about 30, 40 seconds as it happens. That plan should be something like a template almost that you've done a million times. You should have like the sky is falling, how to buy a knife on a historic level, on one of your levels, on a psych level. You should have that template already created. Like it should be in your head
Yeah,
because you've traded it 1,000 times. That's the setup. And I think a lot of people are missing that just looking for plays. Like I just want to find a play. Well, even if you find one, you have to know how to play it, right? Like you can find a
yeah,
football, you still got to know how to line up. And I think that's what's being overlooked with just tell me where to when you get the tell me what you're trading or tell me where you're trading. Well, even if I told you what I was trading, you have to know how to properly plan and manage it. Um, like you're saying, you would have bought the first one. That thing went from like let's say 80 cents if you got a perfect entry to $1.10, $1.15. Um,
yeah,
are you planning on taking money there? Are you just going to hold this thing and let it go down 25%, which it did for the second
yeah,
entry? And I think a lot of people don't understand that in my playbook, definitely, and I think I've ingrained it in your playbook, that your first trade, especially the first trades of the day, you just build a little base. You just you try to get some sandwich money, as I call it. So you do have some stop loss room throughout the day, right? I like to make 150, $200 in my first trade, just so I have that base. Um,
yeah. Well, and I actually on the first moves play the shorter expirations small. And then it's then I'm looking for I've been doing this with end phase. I keep kind of nibbling at it with the short expiration stuff, and I'm looking for well, for me it's going to be probably August calls on a more sustained move back to 180 or something like that. But yeah, so when people ask me when I put my notes up, well, what strikes and expirations? I try to say, but I mean, really, if I'm planning on staying in a trade for 20 minutes max, it's not going to be a monthly. It's going to be, you know, like next week's, maybe even zero DTE if it's a Friday, where you just get that that huge move. So what I did with MSTR, where I kind of just saw, I thought it was going to break down, saw it wasn't, flipped to calls, and it took off $200 to like 700 or something like that. But it really, it does depend on the what you anticipate is the move going into it, the expirations you're going to play. And I think people really get the cart ahead of the horse with options, where it's like they're not studying it enough. And the paper trading, to me, I don't do paper trading because it's not a real good um, approximation of what it's like to actually trade. But I do think studying the contracts, comparing different contracts to each other, that's something I think people need to do a lot more, and looking at actual contract charts as
Yes.
well, not just like the stock's going to go up, so I'm going to buy a call. It has to be, something in particular. And then one more quick example: the Sherwin-Williams trade I posted. I had that, it has monthly calls for one thing. So you're going to be buying May 19th regardless. But I went with that spot at 240 because it was plausible that it was going to make a move back there. And it was out of the money enough to be plausible, but also enough where that contract's actually going to move much better than the one that was in the money. And then the one further out isn't really going to do much of anything because you're not, no one's buying it. So that's why in that particular trade I chose that. Does that mean that you go one spot out of the money with the monthly for every trade that you enter? No, and that's where the studying comes in. My notes do a pretty good job, I think, of breaking down what I buy and why and when and all that. But you also have to put in some of that work on your own to build your own approach and match your own style.
Yeah, I think what people don't get from us that I guess we just formed along the way, so we don't really talk about it. But I am looking for stock moves of 5 to 10%. I mean, that's a huge move.
Yeah,
You have found a way to play the options around that information. So
yep,
it's not everything's mooning. If you find something with more supportive flow, like you're saying, you buy it months out and just build positions. But in the some of the shorter stuff, we're not looking for this massive move, especially if there's not a catalyst or a thesis with it. And I think most people look at plays as they found a spot. I'm going to wait for it to move 5 or 10% for confirmation, and then I'm going to trade it. And 80% of the time, that is our trades. That's what we found is just that simple relief or test of a
yep,
level or playing in an event. And I think a lot of people miss that, and they stay on stuff like way too long. They can't determine which one is more of a swing and which one is waiting for the perfect timing on an event or a level test. Um, and,
yeah.
and and you've built that through the last year and a half. Um, again, have a template for how to trade that.
Yeah, and I just like when Cat was 225, I think, and I saw a breakdown, and then I'm getting asked about puts at 205.
That's the
It's just
dumbest
kind of
thing
like,
ever.
I mean, yeah, it could happen, but I mean, the move I posted already happened. So you're like, you watched all that, and then you're like, well, now, hey, this setup's pretty good. It's not as good to me anymore, and I've kind of moved on to something else. But then, FSR, I saw, I'm like,
Yes.
looks like some relief here. You get in. I didn't know it was going to go 20 something percent, but
No.
I thought like five or 10 maybe. I mean, with where it is in the chart, 10% is nothing for that stock. But it just took off, and that's the second time it's done that. So I
Mara.
kind of have a good take on the flow. Yeah, Mara,
Mara's
same
another
deal.
example like that where there was just nothing on, and I say that because there was nothing on the TA side. That's why that. Again, I'm looking for a template to play the information, right? like
Yeah, yeah.
both of those players were not supported on TA at all. Um,
Um, right, and I think it just the questions of like I'm on my way out of a trade, and the questions I get, do you have levels on this, or just puts like question mark, and neither one of those appeal to me because a new setup needs to develop before I think about my next move with that stock. I took the win. I'm heading to Red Robin or the Cigar Lounge for the day and studying for next week's stuff.
next one,
So
yeah, yeah.
yeah, that's what we kind of mean by by on to the next one. And I don't contract pumpers, they want you to buy stuff that you're already in. I don't want that. I don't, because I for one thing I don't alert contracts. I don't care what you buy, but I don't want to be on my way out and do anything to encourage you to enter there. I
100%.
just that's not what we're about.
It's funny that you brought up Cat. Like we played Cat 2 weeks before. I think like sorry, maybe a month before. Um, when it had the big pullback. But 205.47 is the level I gave. It's the level I have. It's like the only line on my damn chart. That's where we flush to on the ER after the ER. I mean, literally perfect bounce off of that level. At some point in time, you got to trust these damn levels if they hold, and or maybe not like blindly trust them. It's 205, I buy, but understand
Yeah,
what support looks like. Understand what that second stronger test looks like, and just play the. I hate saying it because I'm not a buy the dip guy, but playing just basic relief off of historical levels. I mean, because that's really what we're good at. I would assume if Cat was going to break 200, 205, or whatever goddamn line you want to put on the chart, that the
yeah.
flow would be strongly supported in that decision. Like you would see some
It,
things
it
way
yes,
below
and
that
it
level.
would, and it wouldn't be short expirations. It would be August 180 or
Yes.
something like that. And I've seen that with stocks before, but yeah, Cat was just part of I said it months ago that these industrials, the DIA stocks, that they had outpaced tech and they were overbought. And so we saw a pullback in BA, DIA, John Deere, Honeywell earlier. All of those they're just pulling back. They're not collapsing. It's not confirmation of global recession or something like that. Money rotated out of there, went into tech. They pulled back enough where they're going to have some buyers down here. So, yeah, I completely agree that trusting these levels is important because you don't want Cat to get back to 230 and then you're like, should I play the upside?
Yeah,
It's a
yeah.
lot. It's a lot easier to play it these bounces down here.
Yeah, I just, I mean, again, I probably look at everything like new option traders, but I also have some how to make money, at the forefront of my head. And wait, like cat, you just have to wait for the timing. The middle of the range isn't really there for me, and if you just didn't have this 205 on the chart, I mean, I don't. That's where you should be taking advantage of us. That's how you properly lotto if you want to play some short term stuff is buying off of these historical levels on a really big pullback, and just
Yeah,
hoping you're lottoing simple relief. That's your thesis is taken care of now. Like you don't have to look at news, you don't have to look at anything else. You're just in your head. I'm playing simple relief of the chart, and I think keeping it that simple will help a lot of these people that don't have time out. Um, because right now I think that's a better setup in the market is having some news drop or global event happen and you just get a 10-15% pullback on a stock that definitely isn't going out of business, um, hits a historical level. You've seen the same thing with coin, not that that's a great stock, but when it hit that
yeah,
53 it's bouncing off of it. It just is what it is it going to do it 7 times in a row? No. We've seen Tesla what happens with 184. It will fight for a while, but eventually the overall trend will take over. But that initial test of our levels, you usually are getting relief off of. So just
yeah, for
setting
sure.
alerts there on 4 or 5 of them. I mean, you have to be patient. You're not going to be able to trade every day in that style. But to me, that's the proper way to lotto. Um, and if I'm wrong, correct
Yeah,
me
yeah.
because I don't. I mean, I'm not an
No, it
options guy,
is.
but that seems like the way to
Yeah,
lotto.
um, uh, lotto to me, and the definition of a lotto is this, you know, thing I'm going to buy that's probably going to go to zero. Is not a good definition of a lotto, because why would you buy anything that has
Sure.
a 50-50 chance to zero out on you? I don't understand that. And the people who say they don't have time, like when I hear that, I start like that gets labor out of me to try to find setups that are going to work for you. And then if I see you asking about zero DTE 2 seconds later, that's kind of mixed signals to me, because that's not what you trade when don't have time. Like, so I don't, help me understand
Well,
how exactly you're trying to do this.
they're
That's
they're
probably
they're
where I'm at.
not saying the full statement. Is I don't have time and I want to make 400%. Help me out. And there's just no help for you.
Yeah,
I can help you
right.
out. I can help you out when you don't have time and still make you 25 to 50% if you just take the damn money and you're on time and you follow the setup. But trying to get those home runs when you don't have time and doing it short term expiration, you're just putting too many multipliers against you. You're making it harder than it needs to be. And will you win one every now and again? Yeah, because the professor's that good. But you're going to be the 2 step forward, 1 step back, or 2 step back, 1 step forward guy if you do that. Um,
Yeah,
and
yeah,
that's
completely.
kind of how I see that. Um,
Yeah,
what else did I have? I had something. Let's do Spy real quick. You killed it last week.
yeah,
I was a little pissed that you were Bob Barker and me, but um, as the week went on,
I'll,
not when it happened, but how it ended
yeah,
for you.
yeah.
How it ended for you. Yeah, you can have the dub. So 403 on the downside, and then 416 was the exact. Well, 415.94 was the exact high. So you get 2 points, one for winning and one for nailing the top level there last week. Um, I had 418, 407. Um, I don't know how this week I had more upside than you, but I'm gonna let you start since you killed it last week.
Yeah, yeah, we'll do that. All right, so my downside this week, I'm going to say 410, and I think the trip to 410 involves going up beforehand. So I'm looking at 420, and then 410 on the downside.
410, 420. All
Yeah,
right, man. I don't know if I want to go 407 or 412, but those are kind of the two that stand out. Um,
yeah,
kind of would be late. The low end to me is later in the week. So we're top ending it at the beginning, and then we're low ending it later in the week. Um, I,
hey, I gotta step away for 1 second. I got a roofer
I got you.
here.
Let me
I
pause it.
just gotta.
All right, I was gonna go a little more downside, but I think I'm gonna play that we they're a little dovish, um, and we continue to run. So I'm gonna go 424. Um, with 412 as the downside. Um, I like that. I don't know why I like that 412 number so much, but it just stood out as a
Yeah,
consistent level. It is the 20-day volume profile, so I mean that kind of makes sense. But um,
yeah. I think that's that's definitely possible. And yeah, to me, like if you look at the market kind of psychologically, those August highs, which I think I said like two weeks ago, would be something that people start talking about. So
yeah, that's it.
if we were to get to approach the August highs and then not quite make it and then pull back, like that's a scenario I could definitely see happening.
Yeah, to me right now the linchpin's Monday because Monday's kind of like the hold and see day. So do we continue what happened Thursday, Friday? Do we pump or do we just simply retrace back into that zone? I mean, we closed Wednesday at 405 and we're at 416 now. So to me, I mean
Yeah,
that's a pretty big move. Um, so pulling back to a support level 412 20-day volume profile wouldn't surprise me Monday morning. Um, but I'm still playing the dovish guidance from the Fed after a 25-point rate hike here. I mean, that's just what I'm pretty sure we're all on the 25-point rate hike.
Yes. And if the if oil tries to make a move to 80, I mean, that has an impact on SPY too, because SPY does have, some pretty big energy holdings in it. So if you get that paired with Apple doing a run up into earnings later in the week, like that could move things as well.
I'll tell you what, we have divergence out here in our gas prices and oil prices because it's still four and a quarter out here, 440 depending on where you go for just
Oh wow.
regular stuff. Yeah, yeah, it's a flipping train wreck. So I'm not looking
Uh,
forward to $100 barrel of gas in the summer if that's a thing.
yeah.
um,
Right, because if you don't get the pullback in prices when it's down, you'll still get the increase when it goes up.
hundred
So,
percent,
yeah.
100%. So overall, I guess what's your Monday through Friday weekly outlook here, especially with the Fed talking? Are you running into Monday Tuesday um, till the Fed start talking
Um,
little sideways and continue
yeah,
up
I think
or
I think a little sideways. The day of the announcement, I expect a pretty decent flush, and then it'll kind of grind up into the announcement, and then we'll see where we go from there. But yeah, I don't expect dramatic moves Monday, Tuesday.
okay? I don't see how we don't pull back Monday. Um,
Yeah.
I'd be a little fearful if we didn't, to be honest.
Right, right.
Just because of being so. I mean, that's a big move if we continue these $5 a day SPY moves like for the third day in a row. I'd definitely play the downside into the Fed events if that's the case. But I'm with you with the. I think we will have pullback Monday, kind of a somber Monday, and the Feds will just take over after that. Both directions until they not only get the rate released but um, talk about the forward outlook. And all we're looking for is this is we they just need to say this is the last one and this market takes off. If it's
Yeah,
a wishy washy, I don't know. Um, Probably be super sideways Thursday, Friday, in my opinion, which has been good for the penny side. There's a ton of penny stocks that have enough range for everyone to eat off of. Um, it started with the
yeah,
low float Chinas. I don't really like those as much as other sections, but there's just other stuff from EVs to crypto to the smaller metals and material plays that we've been on that are just not in a good spot. Um, even your mid tier plays that we do like Carnival Cruise, Piton, Funco,
mhm.
all those I think will have really good relief on the other side of this, regardless of the decision. Um,
Yeah. I'm with you. Yeah, Piton's been just kind of slowly bleeding out here
we're getting them 840s
down
back,
to,
man.
yeah.
It's gonna happen. All right. Well, we're real close. You got anything else you want to put in here before we go to work?
Oh no, no, that sounds good.
All right.